Hi, my name is Renee. Welcome to the Kingdom Heirs Book Club. This book, we're reading How to Make Money Selling Short Stocks by William J. O'Neill, which so far is it's been very enlightening. And what I would say so far about short stocks is that if there's a project or something that you need to raise capital for quickly, short stock selling is the way to go. If you get good at it, practice it, implement it, have patience, study the charts, you can actually make a great profit from it. So this is a book club, not a course. So I'm in it, learning things for the first time myself. So it's very exciting. So let's go ahead and get started. So in today's discussion, we are going to look at the anatomy of a short sale. We're going to talk about resources and briefly talk about online brokerage. And I'll just go ahead and start there. The best way to find an online brokerage, this is something that, again, you can do on your own. Just go to Google and type in the top 5 or the top 10 online brokerage account, and it will give you a list. So you have your Fidelities, your Schwabs. Those are places that you can buy online. TD Trade Ameritrade, you can find them. You can also do Robinhood. A new one that was introduced to me, and let's see if I can find it, TradeStation. And what I've heard about them is that timing is everything when you're doing short selling. And so they're more timely in short selling. So that's something to look into. Now, I'll do a quote by William O'Neill. The whole secret to winning big in the stock market is not to be right all of the time, but to lose the least amount possible when you're wrong. This is so key and such a powerful statement, because a lot of times, we use our 401k where it purchases stocks, our IRAs are most times stock-based, your mutual funds, your pension plans. And so a lot of times we'll just say, okay, we know that we need to invest. We know that we're not going to have enough money if you work a 9 to 5 in retirement years. And then after retirement, when you need a team of people, medical people to take care of you. So the thing is, we usually like, okay, I know I need to invest. You have your job. They introduce the 401k right away to you. And then we're like, okay, great. Here's a way that I can have money come out of my paycheck and go into this account that I can use later. Well, sometimes we just park our money and just forget about it. We don't come back to it. We don't think about it. But you do need to manage your 401k plan. I'm all about you personally get involved in your investments, whether it's real estate, stocks, whether it's a business. Even if you're not there on a day-to-day basis, you still should have your hand on the pulse of your business, of your investments, of your real estate. So you don't want to just, okay, here's my money, I can forget about it and not have to worry about it. No, you need to see what packages are available in your 401k, your IRAs. You want to, sometimes you have to move your money. Different economies require different investment strategies. And so if you only know the strategy of here's my money, let me just go turn a blind eye to my investments, you're going to be disappointed at the end when you really need your money. So right now, there are some people that are just watching their 401s decrease in value. So instead of watching that happen and saying, oh my goodness, what's going on, you can go in and maybe find a better package that you're not going to lose your money in that investment. So you want to learn how to not lose, or lose the least amount possible when you are wrong in your selection, investment selection. So I said all that to say that. So in this part 2, it shows us the anatomy of a short sale. And so it's all about chart reading and watching how the stocks are moving, watching how it moves against the 50-day moving average, and how it moves with the economy, and how it moves when, you know, they talk about fear and greed going on in the market. And so one of the things that is showing us is that how to read this chart, see the movement. And of course, there's different templates that, you know, we can glean from and say, okay, this is what's happening with this chart. And knowing when to put it on your watch list, knowing when to make that purchase, knowing, identifying some of the signals, some of the clues that the charts are giving us, the movement of the stock is providing to us. So on this chart, we have the initial stage-based breakout. Now, on the left-hand side of this chart is, so let's just say you bought into it when the price was at a lower amount, and that you ride it up to its peak. So you definitely can make money buying low and selling high. And so that's something that I'm very familiar with, but I want to also learn how to make money when it goes in the other direction, because people make money in that direction. You just have to take the time, like we're doing, having a book that gives us a strategy and some insight on how to do it. So we have the breakout stage. And then we're watching how it's being supported. There's the support level. You see that it's forming a head and shoulder, which we talked about that, or the book talks about that. And then it rallies. So we're watching how it's rallying against the 50-day moving average. And then it begins to, there's a huge volume of break off from the top. So this stock has gone as high as it could go right now. And then you see it starts to drop down. So now we're watching it. We're paying attention to what's going on. We've already made money. It's a company that was moving very strongly upward, and now it has reached this peak. And so now we're going to watch the stock to see what it does and see how you can make money from it. So as you can see, where the 3 is, it's telling you that it dropped below the 50-day moving average, which is number 2. Now it has our interest. And then you see that there is some movement going up. It's kind of riding the 50-day moving average. As you can see, it's making movement on that average. And then where number 3 is, it's telling you that's the proper short sales point before the stock gets to the neckline. And it's saying that that's a good spot to make your purchase. And so this is just kind of highlighting the movement, what's going on with the stock right there, and what to pay attention to. Okay, so the other key thing, this is the same diagram 1, the anatomy of the stock sale, and you can see right where 1 and 2 is on the chart, that there was a big sell-off of the stock, which is down below. Down below, those lines are grayed out right now, but on a chart, it's red and blue marks. So that 1 and 2 line is a red mark, and it's telling you there was a big sell-off. And so down below, as we indicated last week, is that those are our pension plans. Those are our 401k managers. Those are banks, large banks. And so when you start to see a sell-off of mutual funds or 401ks and pension plans and banks selling off on that stock, that's an indication, so when you look at a chart, the chart is giving you all the clues, not all the clues, but it's giving you some major clues to look at and to pay attention to. Not what they're saying on TV, not what your neighbor next to you at work on the next desk is saying to you, but you can go in and make an intelligent investment decision because you're looking at the chart, you're watching the movement, you've seen that this stock has peaked. And so you're like, okay, and you now have it on your watch list and you're just waiting for the right timing to get in and take advantage of the short sell. And here are a few short selling guidelines. I've listed 4 here, and then I'll provide some more. 1, there's a typo. Don't short based on a rumor or theory. Trust the chart, not the analysis. Your shorting will often begin while you are still long on a few stocks. Avoid stocks that pay big dividends. I didn't check my my spelling before and my daughter, she's such a perfectionist there. She's like, Mom, fix this, fix that. So I do apologize. And of course, now it's as many times as I've looked at my presentation, now it's standing out, whereas it didn't before. Here's some more. Short selling portfolio management. Don't short without an end game strategy. Take your profits 20 to 25% when shorting stocks while you have them. When you're wrong, you need to cut short your loss. Don't freeze up or the sky could be the limit. An additional short sell point may be found when the stock rallies above the 10-week line, then plunges down through it again on heavier volume. And these are short selling guidelines. The primary shorting pattern is the head and shoulders. So just to go back. So this, in this area, is considered the head and shoulders. Look for 3 rallies that run in most short sellers. After the public has given up shorting the stock, that's when it really breaks down. The best shorting candidates are the big leaders of the recent bull market after they have formed large stage faulties bases that failed. The best time to short is usually 5 to 7 months after the former leader has topped. So they're saying from here to here is like 5 to 7 months. Make sure your broker can borrow the stock you want to short. Short before it gets obvious to everyone by hitting a new low. Knowing the stock well helps your shorting, especially if you traded the stock on the upside. So let's just say this is a stock we bought low to sell high. Okay, and now that we have some information on shorting, okay, this stock is top, now it's on its way to a short sell. So why not make money again when it goes down? Which is, of course, we're going to buy in here and then take the ride down and make some more profit. So if they're saying that between here and here, set a guideline, have a strategy and an exit plan in place. And one of the exit plans is to determine, okay, I'll take a 20 to 25% profit. Once it reached that, then I'm out. Not to say that the stock won't go down lower, but you want to, again, put some things in place to protect yourself. So let's just say there's some people that probably will come in here for a short. And again, it's about timing. So to know when to get out before it then starts, making this run here. But this right here is where we should get in and to purchase. So here's a strategy. Here's something that instead of going into the market blindly and say, here's my money, trust me, that the stock market will gobble up your money and won't even look back. There's no feelings involved. We'll take your money and just keep going. It'll just get caught up in the whirlwind of the stock market. But if you go in with a strategy, you have an exit plan, you have things in place that, hey, if this falls below this amount, just sell it. We're not going to get emotionally involved. We're going to, okay, so we did find a stock that we're making money off of, that, I'll take the 25% profit and be out. And then of course, you may do more than one stock. So if you're making 25% off of 4 stocks, you're doing well. But at least that you have some guidelines and some protection strategies in place when you make the wrong decision. Excuse me, and that's going back to our quote. And for my visual people, this video has been helpful. So let me get it to the part 2.
William O'Neill. Of the general market averages. After they show definite signs of weakness, only then does it become a question of selection and timing of the individual stocks to sell short. We see here the example of the Dow Jones Index in 1984 and the characteristics discussed by William. Points A and B shows.
I want to make sure I didn't skip over.
This from a stock chart perspective. The trader in question was advanced enough to notice a head and shoulder pattern within this chart. He could see 2 inflection points, which created a support line. And the price has extended way above its moving average line. The trader kept an eye on this support level, and once the price cut through support here, he borrowed shares from his broker and sold the stock short immediately. The price drifted down as he anticipated, and the trader bought the stock back at a lower price, around the moving average area. Therefore, if the stock was sold short at $10 per share and bought back at $5, the trader's profit would have been $5 per share. Let's look deeper into the technical aspects and see some examples provided in the book. William O'Neill says, "It is best to time your short selling with the action and movement of the general market averages. After they show definite signs of weakness, only then does it become a question of selection and timing of the individual stocks to sell short." We see here the example of the Dow Jones Index in 1984 and the characteristics discussed by William. Points A and B show signs of distribution determined by lower closing prices from the previous day and high relative volume for each of those days. William says when you see perhaps 5 distribution days within a 2 to 4 week period, it is time to start raising cash. There are, however, further key points to recognize prior to determining that the market is heading downwards. Here we can see several distribution days. These pushed the price through its 200-day moving average. Additionally, although not pointed out in the book, we can see the price also broke through a rising level of support. This would be an ideal point to look for individual stocks which are ready to sell short. The rest of this video will be focusing on just that. William O'Neill presented his anatomy of a short sale, and this forms the basis of his strategy. A typical action seen here at point B is what he calls the top, identified by heavy volume on a distribution day, which also breaks a prior level of support, shown here. This action is not the time you want to short sell a stock, but it would be a stock to put on your short list, pending the next stage. The next stage is here, where price fluctuates around the 50-day moving average. At some point, volume will start to diminish, signaling that demand for the stock is waning. The signal and the moment to sell the stock short would be here at point 3, just as the stock turns down, accompanied by high relative volume. Some key notes to take from the book prior to applying this to shorting candidates are, firstly, make sure the overall market is in a downtrend. Trying to use such a strategy whilst the general market is still bullish reduces the probability of success considerably. Make sure the stocks identified as candidates for shorting have good liquidity. Ideally, 1 million shares on average should be traded each day. Former leaders from a prior bull market often make good short sale candidates. Momentum tends to fall even quicker than its original price rose. William also suggests waiting for the 50-day moving average to cross below the 200-day moving average, also known as the death cross, seen here. Finally, set a profit target of between 20 and 30% and look to take them often. Let's look at a sample of the many charts the book offers to better demonstrate the strategy in action. The first chart presented is that of Cisco Systems, a former bull market leader through to its peak of March 2000. The death cross William discusses is seen here, just as the 50-day moving average crosses below the 200-day moving average. Also, notice how just before and at the point of crossover, there are several higher volume distribution days. Somewhere here would be the ideal time to sell the stock short. An indicator leading to this trigger point and a reason for adding the stock to your watch list is seen here, a stalling period or area of consolidation accompanied by lower average volume. This suggests the stock is no longer in demand. William also points out a secondary short point here, again a few weeks of consolidation, a bounce off the 50-day moving average and a spike in volume. The stock eventually lost 90% of its value from the peak of March 2000, making this a great short sale. Another favorite of the late 1990s was a company called Corning. Again, we see the death cross formed through the moving average crossover. Williams suggests the point to short sell this stock would be here, after a failed rally above the 50-day moving average on a huge spike in volume. The price dropped from $55 per share to less than $9 per share in approximately 9 months. Finally, the chart of a company called Krispy Kreme Donuts, taken straight from the book. We see the moving average crossover here, a 4-week rising wedge on decreasing volume, and a significant drop through the 50-day moving average on a huge spike in volume. Williams says the optimum point to short sell would be here. Additionally, although not highlighted in the book, we can see a previous point of resistance here, right at the point in which the price bounces off. A stop loss perhaps placed here above the line of resistance would have created an excellent risk-reward trade, possibly more than a 6-to-1 ratio. The price eventually dropped from an entry of $34 per share down to $12 per share over a 6-month period. A great short sale example. There are more than 150 stock chart diagrams within the book, all based on the principles shown in our examples. There is, however, a key warning provided, regardless of the chart in question. If stocks have been in a downtrend for more than 18 months, it's likely you are too late to the shorting party. Shorting stocks at such a late stage is risky and can have serious consequences. For those looking to add short selling to their strategy, this book gives great detail through the many annotated charts offered. I rate the book 4 stars and would recommend it to a more advanced level stock trader due to the inherent risks involved with selling stocks short. Thanks for listening. Please hit the like button and let me know your thoughts in the comments below.
That was some good information. And for those that are visual people, just another voice from, concerning the book. One of the things that I want to talk about is briefly is resources. So I'm a type of person like this book I've had in an ebook version, but I've never read it until I got the book. So when I am reading a book and I'm trying to get something from it, I get the book so that I can write in it, highlight it, and go over it over and over again. But the book you can buy in the ebook type form. Now, this is one thing I will say about William O'Neill is that it's not just a book that he wrote. He also has a website. So if you go to investors.com, everything, like we're learning the fundamentals of selling stock short. And that's something that's good to have because sometimes you can just watch somebody go through the motions of selling a stock short and copy what they did. But then there's going to come a point where, instead of it forming a head and shoulders, it may just, have the head and one shoulder. By learning the fundamentals and how the stock market works, then you can go in and go back to your resources, which is your book, and say, okay, is this a true short sale opportunity or not? But everything, once you're done with the book, like I said, one of the things it talks about is that we want to purchase, do short selling during a bear market. So how would you find out what market we're in? So I love their paper, and I went to the store today to get today's paper, but they didn't have it. So this is an old copy. But right here on the front page, it tells you which, it's right here. It tells you what market we're in, whether it's a bull or bear, or if it's correcting itself. It tells you right on the first page, right at the top right hand corner, well, left hand corner. Also on the book, it's time now to start putting all the pieces together. So the book also talks about, we want to go in and find companies that were bullish and made money, and it's about the top, so that we can watch those stocks. So it talked about industry group ranking. So that's another thing. They do all the work for you. So you can go to the website if you're a person that likes to, be on the computer. You can definitely find all this information in there. The list of the industry group ranking is right here in the paper. You can just go through and find it. You know what I'm saying? Because there's so many stocks out there, so you can definitely get lost. What I love about this, it has everything. If you're into ETFs or IPOs, or it tells you the sector leaders. So it tells you the top. You can go save yourself. You could go in and spend the weekend, over the weekend, and find your top ranked stocks, and do your homework over the weekend. So during the week, when the stock market is open, you already have a watch list ready to go. And these are things that put you ahead of the curve instead of behind the curve. Because as in this chapter, it talks about how, we're not going to be the only ones that is learning how to short sell. There's other people out there that do this on a daily basis. So they're looking at the same charts you're looking at. They're looking at the movement just like you're looking at. And so if we all go in on the same day, that's going to cause a floor to take place. So, but if we buy at the right timing, then that we're the ones that's going to be really making the money. So yeah, it tells you the top ranking companies. So you can go in there and see what companies are top ranking, kind of pull those companies and add them to your watch list, because if what goes up must come down. And so again, here you want to find resources, things that are going to help you be successful at making your investment choices. So if you go to the investors, they have everything that you could take. They have the charts. I've added some other charts on there, Y charts and stockcharts.com. You can go to Yahoo Finance, anywhere that you can find stock information. You could use your online brokerage account. They have a lot of educational things that you can begin to start putting together to help you make the right decisions on your investment. So that's what I highly encourage you to do, is start, deciding now, like this week, let that be your assignment. Go in, if you don't already have an online brokerage account, that you begin to find you one, and then, set up a dummy account, because just right after we finish reading the book, you don't want to jump right in and start short selling, but begin to create a watch list, get your tools. And like I said, William O'Neill has made it all easy. And then again, each level of that you may take advantage of, it's a cost, it's a fee. Like it cost me to purchase the newspaper, it cost me to purchase my book. But these are low costs, but you can also sign up and have access to charts and the bells and whistles that go along with that, because like I said, there's some people that have made this a profession. And so you're up against people that have, when they have a software program or when they have a membership to charts and different things, they're going to be always ahead of you. And depends on your exit strategy. If you're only like, okay, I need to make 30,000 because I need a down payment on my next real estate deal, then, hey, for that short period of time, you're focused on your goal. I need to make 50,000 or 30,000 in a short amount of time. This is not a long-term investment. This is more of a shorter term investment that you can make to accomplish, if you need to raise capital, that will allow you to do that and on a shorter period of time and not tie your money up for the long run. So my final thoughts to keep in mind: do your due diligence. So again, this week, begin to, if you, check out the IBD website, they give free, like, for instance, you can, if you order their paper, someone will, when I started getting into the IBD, I called and they offered someone to call me and do a one-on-one, took me through the entire paper and showed me how to use this paper to my advantage. And so it was free. They'll also give you, they have classes, they have resources that you could just spend time to begin to, look up short selling. You want to get all the information that you can find on that. You can, we have access to everything on the internet. You can find people that short sell, that's all that they do, and go to their YouTube channel, get on their lives, podcasts. You can find podcasts of people that short sell, and when you're listening, I can almost assure you that the conversation is going to be over your head, but by reading the book, it's giving you the terms, it's giving you the charts. So when they say a word, you're not lost. Like, you're not, saying, okay, what are they talking about? But like, for instance, it talks about subtle clues to look for. So one of the things that you're looking at is called stalling. Another one was wedging. I saw that in the video. So again, had I not read the book and become familiar with terms and definitions and stuff like that, that would have went, I would have missed that clue. But that's something to look for. Looking for railroad tracks, island tops. Again, this is giving you the foundation. You need a strong foundation to build a house, to create, to build an investment portfolio. And so this is giving us a foundation. And then we're going to start building the walls and the nails. We're going to get more details, but you got to keep growing. You got to keep reading. You got to keep, again, associating yourself with people that are doing this on a regular basis, that are successful. Use your resources. So say once you, start short selling for real and you find yourself get stuck, go back to your resources, recap what you've learned. And then you could find that, there's steps to this, there's layers to this. And you can go back and backtrack and find the step that you missed, and then go back and incorporate it and continue on your successful journey. And don't take shortcuts, meaning that there are people, because we have access to everything, there's people that will jump on someone's YouTube channel, or jump on a podcast, or jump on a live, take notes, because, I do lives too. So I'll get on there, and I'll talk about real estate, talk about investing. Like, I'll talk about the things that I walked away from the book. So the things that I share with you today, like just going back on this sheet, you're with a limited time. So just this part right here, short selling guidelines. I've only shared 4 steps on my slide. So I may upload this video to YouTube, but if you recall, I read those 4 steps, but because of the book club, I went and gave you all of them. So again, someone that may be watching this video. So if you're watching this video, I did give you some other short selling guidelines, but my point that I'm trying to make is that when you're watching people, whether you're watching them for a half hour, 15 minutes, 45 minutes to an hour, there's no way that I can give you all the steps to real estate, all the steps to short selling, or all the steps to whatever. They're just going to give you some key things. So when you get out there and you try to do it on your own, you're gonna hit a roadblock. But again, when you know the fundamentals, that's why I highly recommend that you get some skills, like, before you build a house, take some blueprint classes. You got to put something in order for it to, for you to put it all together and it not fall apart. Or again, when you're dealing with the stock market, real estate, or business, you're going to lose money. You're going to lose money, but it's not going to be on the scale of jumping in with no knowledge at all and just, watching a video and then now you're buying stocks. No, you're going to read your book. You're going to watch videos. You're going to just keep growing in knowledge. And then we're going to set up dummy accounts so that we can get the experience. And then, like, okay, you can tell when you get it, because if your dummy portfolio is making money, then okay, you got the concept down. Now you can get out there in the real world. And again, you don't want to take your life savings to do it. You want to set a budget. Okay, I'm going to start off with $500 or $1,000, something that's not going to make or break you. So I hope that was helpful. So don't take shortcuts. And then of course, this is a video if you're watching me on YouTube or Facebook or Instagram, by all means, please still ask your questions. The best part of my learning was being in an investment club and us all collaborating together, because, I may just only be looking at the business aspect. I'm a business-minded person, so I can definitely research a company and pull out all the business things. But then another person that's in the group is an accountant. So she just, the numbers stand out to her. So I can glean and learn something of numbers, and she can glean and learn the business aspect. So when we all get together and share our conversation on whether or not this company is a good buy or sell, you expand your knowledge. And so that puts you ahead of the curve versus behind the curve, like not being the last person in on the deal and where it's too late, or you're just getting the crumbs, or you're the type of person that, you respond to all the news that takes place about a company. You learn to make an intelligent investment decision. So again, thank you so much for joining me today. I'm really enjoying it. I can't say I always wanted to learn, but I did want to learn. I purchased the book, and now I'm actually getting into it. And again, just from part 2, just watching the video, I picked up that he was showing wedging. So again, the more you're around, the more that you hear the terms and see how people are flowing, and with different, like right now, there's a war going on. There's a different type of move. You got to be fluid. You got to be willing to, okay, here's, one strategy, but to be able to transition into 2 other strategies that as well. So that way you can stay making money in any type of economy. And again, feel free to follow us, subscribe, chat with us. Let's talk about it. And thank you so much for joining the book club. The next part is part 3, which it looks like that's the last part, and which looks like the largest part, but really it's all charts of companies. So we'll start looking at some real life companies. We'll start applying and just structuring the steps. Like, again, so far what I've picked up, and you can share what you picked up, but again, we're looking for large companies that have done very well. So we're going to look at the ranking and see companies that have done very well that is reaching the top. They're topping off. They've gone as far as they can go right now. So whatever goes up must come down. So again, we can make money when they're strong and growing. Definitely get in there, take advantage of that opportunity. But when we see that they have topped, these are companies that we've made money going up. Now we say, okay, they're showing signs of weakness. So let me go ahead and sell, take my gains, go ahead and sell. Now we're going in this direction to make money. And so why not make money going both ways? The other thing is that we want to look at the large banks and how they're buying and what they're selling off. That those are clues. We're going to look at the chart. We're going to look at the charts to make sure, the daily chart and the weekly chart, to see movements, price movements. We're going to know how to use it against the 50-day moving average, or the different averages. We're going to learn how to, which we talked about that. We're going to pay attention to that. We're going to pay attention to the different things and when to make our moves. So again, we have the nuts and bolts, and we're going to just go ahead and build. We have the ingredients for a solid foundation to build this to add to our financial portfolio. So bye for now.